Hey, good morning. This is Mayor Valensky with Driving Markets. Driving while talking about markets. Anything said in this piece is an opinion only. So yesterday when I spoke about Silicon Valley Bank, Silvergate and also Signature, I did mention that Signature shares dropped 23%, unlikely to go bust. And yesterday the Fed on Sunday issued a note that they're going to guarantee and bail out the banks and depositors. So anyone who's got any money above $250,000 in SVB, Silicon Valley Bank, will get federal support, as with Signature. Now, they closed down Signature because it could cause systematic breakdown of the banking system. Signature is a much smaller bank than Silicon Valley with about 90 billion in assets, but it's an indication of the crisis within the banking sector. Remember, I've stated over and over again, there is a liquidity issue. The liquidity issue started back in January 2022. But if you really want to go back to 2008, 9, 10, when all the banks collapsed due to the mortgage-backed securities failing, the swaps, credit swaps, etc., etc. Obviously with Lehman's, obviously with Bear Stearns, and a load of other banks went bust. And this is the first time since 2008 that effectively three banks, Silvergate, Silicon, and Signature, the three S's, SSS, have all gone bust or being bailed out, as a viewer correctly stated, not gone bust, being bailed out by the taxpayer. Where that money is going to come from, who the heck knows? But there will be more casualties and there will be more victims of this banking crisis. This is only a start. If you go all the way back to 2007, it was nationwide mortgages that started the crack in the financial system, and yet was totally ignored. Overnight, financial futures have jumped in the Dow, the S&P, the Nasdaq, and in Europe on the back of the Fed bailing out the banks again. And this has given an impetus to the market to move up. But this is short term and an opportunity to be sold into. There's no way we can go back again where the Fed is going to start, or the central banks are going to start bailing out banks as they have in the past. It's not going to happen. If it does happen, then you ain't going to see inflation at 6% or 7%. You're going to see it at 30, 40%, because the money has to come from somewhere. It's not just picked out of hot air. Now, what could happen, which is very unlikely, they could go on a quick quantitative easing or a quick bond buying exercise in order to provide liquidity into financial markets. That ain't going to happen. That's very, very bad, and that is simply not good enough, as this will lead to a bigger crisis, bigger than the 2008. Remember, as interest rates rise, there is going to be more liabilities on the banks. Why is that? Because a lot of banks invested at the beginning of last year, like Silicon Valley Bank, in bonds, and the prices dropped, and therefore as a result of the price dropping, they're now in negative and they need to raise capital. Other banks also bought treasuries thinking that is going to be a solid security going forward, and yet they bought them at the very low yield, and as interest rates rise, those yields have risen, price has dropped, and in fact they're all going to be stuck. It's now a matter of time who is the next bank, or which is the next bank to fail. This is leading on to the failings and continuously compounding the failings within the crypto industry. It's one failing after another, one scandal after another, and there'll be more platforms, more exchanges going bust. Interestingly enough, the crypto sector and Bitcoin have jumped overnight on the back of the Fed bailout, because they also believe that if the Fed's going to bail out the banks, then cryptos are safe. Wrong. We are going to go down. This is the beginning or the continuation of the downward cycle from 2022. I've been calling over and over again, markets are going to go down, cryptos are going to go down. This temporary band-aid over a gaping wound is simply not sufficient and will lead to further blood on the streets. So anyone who thinks or believes that markets will only go up and the Fed and the central banks are going to come to the rescue, they are wrong. This is not going to happen again. In fact, if they do it again, it's going to cause huge economic breakdown, economic crisis, and we're going to have a recession that you haven't seen since 1929. The time now is to go short, and any banking stocks need to be watched and need to be looked at in depth. Furthermore, viewers have asked me, what about cryptos? Crypto is a high risk asset. It's not a low risk asset. Is it going to go up? Anyone's guess. Is it going to go down? Highly likely it's going to go down. That's it for the moment. This is Mayor Walensky with Driving Markets. You can subscribe, comment, share, and be more than happy to answer any questions. Have a good day.